Welcome everyone to our third in the masterclass series on security of financial services and fintech. And welcome to all of you from 89 countries. I think that's remarkable. So I think interest in our subject today is truly global. Today we're looking at digital currency and regulatory compliance, and your hosts are the Institute for the Future of the University of Nicosia, the City University of London, and supported by the Worshipful Company of Information Technologists in the City of London, specifically the Financial Services Technology Panel, which I chair. Now, our masterclass series has essentially explored how blockchain as a platform is impacting our industry. And it seems to me, after a very long career in the financial services technology sector, that this is just the latest disruptive technology. But in a few short years following the first instance of blockchain use, remember Bitcoin, that's all we could hear, we have arrived at a place where we have many multiple use cases, and not just by fintechs. We are now hearing about central bank digital currencies, CBDCs, stablecoin, retail CBDC. Add to this the emerging metaverse and Web3, and we begin to need a roadmap to understand the extent of this particular disruptive technology, let alone the regulation needed to keep pace with it and changes and challenges of regulation. Today, we add to that roadmap with two true experts in this emerging field. Keith Baer, who's a fellow at Cambridge Centre of Alternative Finance, will cover the range of private and sovereign digital currencies, including retail CBDC. Mohammed Tanoli, founder and CEO of Portex, a decentralized digital economy platform based on blockchain, will take us through regulatory challenges faced by stable currencies and virtual currencies, and introduce us to a model of how retail CBDC will facilitate the digital economy through regulated programmable money. Now, the only thing I have left to say is a bit of admin. Please send in your questions as they occur to you, but we will keep them until the end, and then I will start fielding questions to the speakers. So without further ado, I'm going to pass you on to Keith. So Keith, over to you. Thank you.
Thank you very much, Julia, and hello everybody. And thank you very much for the invitation to speak to you. I'm hoping you can all see my slides. So just to introduce myself a little bit, as Julia said, I'm a fellow at the Centre for Alternative Finance. We're a research centre focused on digital assets in particular within the business school at Cambridge. Prior to that, I worked at IBM for many years, leading financial markets as an industry and doing quite a lot of work in blockchain deployments within financial markets. Besides the Cambridge role, I'm also on the Bank of England's Central Bank Digital Currency Technology Forum. This is obviously a very hot topic of the bank. I'm also on the Consultative Working Group for Financial Innovation at ESMA, the European Securities Market Authority, amongst other roles. So over the next 20 to 30 minutes, I'll be talking about central bank digital currency, primarily retail central bank digital currency. And let me kick off just trying to set a little bit of context first. So many of you probably appreciate this nature of money, the money view framework, if you like, where we're looking at base money at the top of this particular pyramid. This is central bank money, which really has two forms, physical fiat cash, and secondly, the deposits that commercial banks hold at the central bank. Then we have bank deposits, commercial bank money, as we see in our retail banking accounts, and then securities, etc., M0, M1, M2, etc., which is really what we're talking about here. So what's interesting is if we overlay different types of digital money against this kind of environment. So just to position things, first of all, we have central bank digital currency at the top, which is essentially just fiat money in a digital form. We then have stable coins, and I appreciate Mohammed will be talking about this in more detail, but bank issued stable coins such as JP Morgan coin, which is not actually a stable coin per se, Signature, I should say, and the Signet platform from Signature Bank in the US, and also Silvergate, who have acquired the assets from Facebook Meta in terms of the Libra DM stablecoin that was planned to be issued, but obviously didn't see the light of day in the end. Besides these bank-based stablecoins, we also have privately issued stablecoins, most notably fiat-backed stablecoins backed by fiat reserves, USDC and Tether being the largest of those examples. We have crypto collateralized stablecoins, so rather than using fiat, having crypto assets as a means of providing the backing, as in the case of DAI, which is the stablecoin within the MakerDAO DeFi protocol. And then somewhat more notoriously, algorithmic stablecoins. The example, obviously, in the news of late has been Terra, which through its collapse, which was not backed by anything in particular. It was really just using an algorithm to provide a supply and demand mechanism in order to maintain a peg against the US dollar, which obviously failed in the specific set of situations. So what I'd like to talk about, as I said, was primarily focus on retail CBDC. But it really needs to be against this kind of context you can see on the chart here of a spectrum, if you like, from private money, from the crypto asset world, Bitcoin, Ether, etc., the non-bank companies issuers of stablecoins, as I mentioned, the bank issued stablecoins, and then the central bank digital currencies on the right in terms of digital representations of sovereign money. And it's interesting to note, I think, that the private initiatives are really gathering a lot more steam of late. This is just some recent examples from earlier this year. So Silvergate's acquisition of the Facebook assets around DM, for instance, Bahrain's central bank's collaboration with JP Morgan Coin, and also quite interestingly, a consortium of US-based banks, USDF, who have come together to issue a dollar-pegged stablecoin in their own right. So this is just a short sample of some of the various private initiatives taking place in the world of stablecoins, which is interesting to bear in mind in terms of the broader context of what's happening within CBDCs. So let's turn to CBDCs. Some of you may be familiar with this diagram issued by the Bank of International Settlements, the so-called money flower. And it's a very good, I think, high-level representation of different forms of money, be they digital or not digital, whether they're issued by the central bank, whether they're token-based or account-based. And it illustrates the major, in the shaded area in the middle, the major categories of CBDC, i.e. those which are digital tokens for wholesale use only, so really wholesale settlement, those which are focused on retail, and those which, and therefore more general purpose usage in that respect. And the focus of most of what I'll be talking about is within the retail category, general purpose category of central bank digital currency. So what I'll be trying to cover is, having covered the what a little bit, the why, the when, the who, etc. So first off, let's look at the why. Why is there a need for CBDC? Do we need it? Is it a solution looking for a problem, which is one of the comments often made. Just to summarize that on the left-hand side, there are a number of pros and cons of a central bank digital currency. We talked about the rise of stablecoins at the moment, and particularly for developing economies, there is a significant concern that dollar-based stablecoins could prove more attractive to the retail population because their cost, low cost, and easy accessibility, etc., than the sovereign country for the sovereign currency for that country. So this competition with private currencies is one of the key factors in maintaining the relevance and strength associated with national currencies. There's the question of being able to improve efficiency and cost reduction. Physical cash has a significant amount of cost associated with it, especially for the commercial banks that are having to manage physical currency all the time, of the order, I think, of 0.5% of GDP in total. So it's quite significant. For many countries, especially developing market countries, there's an argument for CBDC to facilitate financial inclusion. The banks don't necessarily always reach out to all parts of the population, especially in remote places. So being able to address financial inclusion is another driver. And then obviously enhancing the international status of the currency itself, as I touched on earlier. But balanced against that, there are a whole set of risks and other considerations. One of the biggest, I think, is around adoption. If a central bank is to issue a CBDC, if it's more attractive because people, general population, buy into the fact that it's central bank money, therefore it has effectively zero credit risk because the risk is against the central bank as opposed to a commercial bank, there could be a very big uptake of CBDC, which would drain funds basically out of the commercial banking environment. And that obviously reduces the balance sheet of commercial banks and their ability to lend, etc. And in fact, this has been in the news just this week with the governor of the Banque de France making the point that in his view, if we see a digital euro, there should be a cap. It's been mooted at 5,000 euros or something of that order. in order to avoid that disintermediation risk of the commercial banking environment. On the other hand, if people don't really care about the fact that they have digital money, which is a CBDC or what they're used to in terms of commercial bank offerings or private issuance, then the risk is it won't get adopted at all. And obviously all the cost and expense associated with it will have been a waste of time and a waste of money. So finding that middle ground to get the right level of adoption is one of the key challenges. Other comments around operational risks, cyber risks, etc., they all have a relevance to this as well. But one of the biggest reasons, of course, is the decline of cash as a means of payment. So on the right-hand side, these are the figures for the UK at the moment. And as you can see, we've been having a significant decline in terms of the percentage of payments made using physical cash, down to less than 28% now. And obviously COVID and contact payments have made a significant further dent in that since 2018 in this chart. And obviously the central banks still have an objective in many cases to maintain the ability for the general population to have access to central bank money. And if that central bank money isn't available or not in use as a physical cash, then CBDC is the only alternative in that context. So how could a CBDC be implemented? I won't get into the details of this, but mostly what we're seeing is this kind of two-tier model that you can see on the right-hand side. This is just taken from the Digital Dollar Project, which is a US initiative to illustrate how CBDC could be implemented in the US. And as you can see, the model here, and this is very similar to the Bank of England's model, which is based on a so-called platform model, where the central bank at the top issues central bank digital currency, or digital dollars in this case, to commercial banking entities. In the case of the Bank of England, they're called payment interface providers. And those commercial bank entities or other regulated financial intermediaries then onward issue both the wallets and the associated CBDCs to individuals in the broader population and also to commercial businesses. And you can see the KYC and other responsibilities in this model reside with the commercial banks, and the central bank just sits on top of this, maintaining the relationship with the issuers of the CBDC. But the key point being that the usage of CBDC at the lower end by individuals or businesses is a liability now on the central bank, of course, rather than on the commercial banks. So who has been piloting CBDCs? So this is the latest survey information from the BIS. So as you can see, over 90% of banks have been engaged in, central banks that is, have been engaged in some form of CBDC. Mostly this has been either retail CBDC or a combination of retail and wholesale. And as you can see over the years on the third graph, this has been an increasing focus in terms of actual development or pilot arrangements as opposed to just POCs and experiments. And most of this activity has been focused primarily on the retail side, as you can see, in terms of the actual pilots and proof of concepts as well. So when might we see a CBDC? Again, this comes from the BIS's survey. And again, as you can see through the various years that the BIS have been surveying the central banks, the likelihood of us seeing a CBDC in the medium term, for retail at least, is getting ever more likely. Up to around over 30% of central banks are seeing it within the medium term, 1 to 6 years. For the Bank of England in the UK, if the decision is made by the bank and ratified by Parliament, then the formal position from the bank is that it would still be the second half of this decade, so 2025 to 2030, before it would be available. And the ECB is obviously in the press at the moment as well in terms of their focus on the digital euro. Similar kind of timescale, maybe a little bit earlier, but similar kind of timescale essentially. So when might we see a CBDC? Actually, they're already out here. So many of you be familiar that the Bahamas actually went into production back in 2020 with the Sand Dollar, which is formerly, I think, the first retail CBDC that's been implemented. Big focus in terms of providing access to financial services, especially in the time because of the very large number of islands in the Bahamas and the risk of damage to providing financial services during hurricanes, etc. Interesting to see how that's also now being made available on a physical card as well as accessed by wallets sitting on your smartphone. That was followed by the Eastern Caribbean Central Bank, DCash, in terms of number of the islands within that group providing CBDC, and followed again by the Naira in Nigeria, also live more recently at the back end of last year. But the biggest implementation, obviously the US is looking at this as well, but the biggest implementation, still a pilot, but the scale is quite impressive, is China and the People's Bank of China's project, the Electronic Yuan, ECNY as it's known, which has been building up over several years now, to the extent that over 261, by the last reckon, 261 million personal wallets have been opened, and 3.5 million corporate wallets likewise, with a total transaction value over $13.8 billion. So this is quite a significant volume of activities, and obviously China has learned a great deal in terms of questions of adoption. How, in particular, how does the Electronic Yuan sit alongside the major payment vehicles that are present in China? Obviously Alipay and Wechat Pay. We'll get onto that in a second. Obviously, there's questions on privacy and other topics, which I think Mohammed will come to, but China is a very interesting test case for many of these topics. So just on positioning of the existing wallets, fintech digital wallets that China has access to, or Chinese people have access to, in terms of Alipay and Wechat Pay, they have the characteristics on the left-hand column here. They're not anonymous in that sense. They don't provide any means of providing offline payment as such. You're kind of tied into the respective ecosystems. You can't operate under different types of accounts. And there's fees associated with withdrawing money, for instance. And those are all, as you can see, for DCEP, which is the earlier name for the Electronic Yuan. These are all characteristics which the Electronic Yuan has advantages over those Wechat Pay and Alipay wallets. And this is one of the factors, these factors at the top are driving a certain amount of the adoption that we've seen with people downloading the wallets, connecting them to their bank accounts and using them in the large number of merchants now, as you can see, 3.5 million that are now accepting payments with Electronic Yuan as well. The way this has been implemented, and I think Mohammed may pick up on the questions of privacy later, but for China, they have 4 categories of use. You can just access Electronic Yuan using your mobile phone, not going through any identity other than your mobile phone number, which gives you access to a total balance of 10,000 renminbi, or a total single transaction value of 2,000 renminbi, a couple of $100 or something of that nature. So pretty limited, but this is one of the ways of being able to have further outreach, that you can provide offline payments, which is one of the facilities that Electronic Yuan provides. As well as not necessarily having to have a bank account in order to transact. So hence a level of financial inclusion, assuming that you have a mobile phone, of course. But then you can go through the other categories right up to the top, where you have to visit your bank branch, you have to link to your bank account, you have to prove your ID, etc. But on that basis, at the time this was published, you would then have an unlimited access to both balances and transaction values within the Electronic Yuan. Very different to what's being proposed in Europe, as I touched on, where there's big concerns on the impact on the commercial banks, which is leading to the talk of holding limits, which obviously is the case in China for the lower categories, but not for this top category. I think it'll remain to be seen how this is actually implemented when it's fully in production, as opposed to in a pilot. And then just to close off, just to show the positioning of CBDC in China against Wechat Pay and Alipay, they obviously have very strong favorability ratings because they're over 85–90% of mobile payments are taking place through these 2 platforms. But as you can see, ECNY is already hitting that 30% level of very favorable feedback in terms of customer usage. So it is making big strides in terms of being able to be a viable payment method, which isn't competing with Wechat Pay, Alipay, because those entities are collaborating with the People's Bank. But it's finding its own place in terms of how it can be used in terms of payments, etc. And just to touch on the bigger consequences of what I've just been talking about, there are early signs, I think, of how the Electronic Yuan might show its face outside of the domestic use within China. This is an example of where it's being explored to be used for supply chain finance out of Shenzhen. Whether we therefore see greater externalization, internationalization of the Electronic Yuan, and what that means for trade, for example, with China's One Belt, One Road initiative, then I think that's going to be pretty fascinating on the bigger question of how trade finance, supply chain finance will be making use of digital currency and CBDC in particular, and the potential advantage that China has in that regard. So just in closing, I would argue that we're seeing a bit of a bifurcation in terms of central bank digital currency with smaller economies where there's a need for financial inclusion, and other topics that are driving this, such as the Bahamas, ECCB, and Nigeria, etc., progressing pretty quickly with CBDC implementation. And the larger economies, with the exception of China, for the reasons I talked about before, but US, UK, Europe, etc., taking a slower and steadier approach, in part because of the complexity around some of the policy decisions that have to be made on data privacy, some of the other factors that are big policy decisions that need to be made before the technical solution can be designed and delivered. There's obviously questions on interoperability, and there are efforts by the Bank of International Settlements to facilitate how, and again, this was very much in the news recently, how interoperability can exist. Are there just going to be compatible systems between different countries? Are they going to be interlinked in some way? Or will there be a single multi-currency platform that will enable collaboration at a much closer level of integration between central banks? Obviously, stablecoins are running in parallel with all of this. So as stablecoins become potentially used to a much greater extent in terms of payments, exactly what this impact may have on CBDC deployment. And what about the questions on those countries which have concerns in terms of weaker currency and what the impact they may be as the major currencies become available in a fully digital form? And then finally, as I touched on at the end, will international trade be the next battleground for a lot of what we're talking about? So I'll just finish off with some reading for those that want to get into a bit more of the detail, but I'll stop there and hand back to Julia.
Thank you, Keith. Thank you. Well, yes, so it's not a matter of if, it's when, and it's happening all around the world at a different pace. Well, Mohammed, over to you to tell us a little more and to look at the challenges of regulating this area. Thank you.
Thank you very much, Julia. I'm Mohammed, and I'm the CEO of Portex. Portex is a decentralized digital economy platform, and we are looking at 3 layers of decentralization: at connectivity, asset monetization, and payment processing. Our model include extensively, we are looking at regulated stable currencies and retail CBDC and how they can facilitate the small retailers and freelancers in the domestic market and around the world. Interoperability is one of our key research area, and we are looking into it, how we can combine the system can be interoperable between the stable currencies and the CBDCs. So today I'm gonna cover stablecoins and the rise of retail CBDC and regulatory challenges. So the first thing, before we jump into it, we need to look at stablecoin and their operating models, and then regulations and CBDC itself. The regulatory challenges will be faced by both stablecoin and CBDC. Now, they will be different, but there are challenges for both the models. So if you look at the stablecoins, they are low cost, safe, real time, and more competitive payment methods as compared to the conventional payment methods. But the operating models, which are fiat-backed, commodity-backed, and crypto-backed, they have their own challenges, regulatory challenges. The regulations such as market and crypto assets in EU and FCA and SEC, they are challenging all these operating models at different levels. Then the rise of CBDC, central bank digital currencies have their own challenges on the privacy level, on the data protection level, and security levels, and how the distribution and issuance and settlement will work. So if we look at the stablecoin market share, we have USDT, USDC, and DAI and USD, and so we have a set of stablecoin, and according to consensus report, over 1 trillion stablecoin were transacted on Ethereum in 2020. So looking at the stablecoin, if we look at, so we need to really categorize stablecoin into two categories, a global stablecoin and domestic stablecoins. Global stablecoins are the one which are used in the exchanges and used for transacting across the borders. They have their own benefits and how they are facilitating the current transactions in the exchanges. But with that, there are some questions around those stablecoins. When the transaction is processed in a jurisdiction, what about the tax compliance? Where the transaction is originated, where the transaction is processed, and how it will come into play when it's come to dealing with the taxes. What are the exchanges in terms of regulation? Who are transacting with who? And redemption and wallet providers, consumer protections. All the stablecoin settlement are on permissionless DLT, which we called blockchain. So settling on a permissionless DLT raises the question around the privacy, consumer data, and the protection of the transactions. So a lot of these questions, which raised while the global coin stablecoin transaction take place. So looking at this, when we come to the operating models, we look at three levels. We are talking about issuance, redemption, stabilization, and transfer of coins among the users. Now, the first thing is the issuer itself. If we are looking at the issuance of stablecoin, it will be issued by a private company, such as Tether. Now, the key question is whether there are reserves in the bank and there's a transparency. Tether was in the news about the lack of the reserve and what they are claiming, how much they have in the bank account, whether there is segregation is possible if they are using a private bank for their reserve, and what proof they have that they have no access to that account, segregated account. Now, beside that, we are also looking at the AML, how they are putting the governance, where the governance is, how the AML and KYC processes take place when you issue a stable coin against a reserve in the bank. Now, looking at that, when we talk about the EU, we are talking about MiFID and the new market and crypto assets regulation, which talks about the custodial capital requirement and the governance. When we talk about custody, then it raises the question around how much in terms of insurance. So if you have deposit in the bank, the money is insured always. There is 85,000, the cap is 85,000 pound. So what are the insurances around if something happens, and what are the consumer protection? So if we look at the operating models and if we look at the issuer service provider who facilitate these transactions, the question is that what are the governance procedures for the issuers and how the transaction will take place between two users and under which law. If I'm transacting from UK to US or India, so my jurisdiction laws are completely different where the transaction originate. So here come another scenario which is called territorial jurisdiction, where the origin of the transaction can be tracked and taxed. So when that transaction land in the other territory, what will be the regulation on that? So if we look at the three standard framework, which is FCA, Crypto Assets Framework, MICA, and Security Exchange Commissions, then stable coins are in a regulatory spotlight that the transaction processing on exchange, current transaction processing are against the regulator. Now, if we look at, when we talk about the legal and regulatory side, then we are talking about the governance. The governance is not itself on the issuer, it's not on the service provider, but there is another part of it, which is called transactional level governance. When a transaction enters into a permissionless DLT structure, there are many, we are talking about security of the transaction, the privacy attached with personal data, and the usability of the transaction and whose that data is shared with. Looking at where we are now, the insurance which is being provided to the household when they transact is up to 85,000 pound. there are no insurances around the stablecoin transaction processing. Then we look at the safety and efficiency and integrity of the payment system. We cannot see that completely implemented in stablecoins. Cybersecurity and operational resilience. So again, if something goes wrong with the issuer, and what will happen and how they will secure and how the fund will be, how the consumer will be ensured that the fund are protected. Data privacy, protection, and portability. Most of the transactional data is publicly available, which is personal data again, and how their data will enable consumer that they can claim this data under GDPR. When we talk about GDPR, we talk about all these right to data portability and right to deletion. So how these transactions will be deleted from the DLT? The question is that I have right under GDPR that I can delete my data and I can send a request. So how those transactions will be deleted and eliminated from the system? Now, looking at the consumer and investor protection.
If the consumers want to get back into power, if they go kill that market completely and price cap it back down to where it was, and go, well, if you can't.
So, sorry, there was some sound in the middle. So we are looking at EU-wide licensing regime for a crypto asset issuer and service provider. So what the regulators are looking at is that bringing these service provider and issuer under the regimes, MiFID II, they can also be under the 5th Anti-Money Laundering Directive, where they can have a set of governance processes and they can follow all these risk management policies and liquidity management and the procedures. Under the MICA, they are also bringing in a regulation where each of the stablecoin issuer must have an electronic money institution. But again, there is a but underneath it that if you are issuing a stable currency and if it's not classified an e-money token, then you have to go through another procedure. So looking at all these set of already the regulations which are already in place, the MICA in Europe cover all these regulations and bringing it into play within the next 6 months' time. So where all these stablecoin issuers will be under the regulation. Now, here come retail CBDC. If you're talking about retail CBDC model, retail CBDC facilitate the usability of the central bank digital currency, which is covered, to enhance the financial stability and to cover the monetary and to support monetary policy. Now, when we talk about the CBDC, the challenges are itself is issuance, distribution, and settlement. So the questions really is who will issue CBDC, the central bank itself or the commercial retail banking sector will take it over and they will issue CBDC on behalf of the central bank. And the distribution model, what will be the distribution model? How the private and public sector collaboration will come into play. Then what will be an interest bearing or not, and how the settlement will be done. If the distributed ledger technology come into play, then we are talking about, again, a lot of consumer level protection, the data, GDPR, privacy laws, the security of the transaction, deletion of the transactions. So all these three there are challenges around these three areas because we are talking about CBDC, essentially issuance, distribution, and settlement. So we have set of questions around these three domains. Now, retail CBDC adoption depend on the user accessibility. The current payment system provide consumers a very user-friendly the way they are transacting and why they will transact. The digital infrastructure is very important and how it will function. If the central bank directly issue it to the consumer, then what will happen to the retail banking sector? Then looking at the legal and regulatory issues around the data and the monitoring of the transactional data of a consumer and a complete picture. If the central bank issue themselves, then they are monitoring our transaction at every single point where we make transactions. Then another area of concern is the degree of anonymity, anonymous transactions. So what if we don't want them to monitor our transaction, then we are talking about anonymity. Then anonymity is directly linked with AML, and what happens if the transactions are anonymous and if it's being used for other purposes. Under GDPR, monitoring citizen and sharing data. If a retail bank facilitates CBDC and I am only consenting the retail bank to access my transactional data, what will happen if the central bank access my data? So it's beyond GDPR. So it's against the current data protection privacy laws in the Europe, in the UK. Then we are talking about operational resilience. What model, what technology, whether it can be a decentralized or centralized technology, how it will come into play. They are very important questions. And the tax compliance and consumer protection again. So these are some of the challenges which retail CBDC will face. And the current model, which are live, they are facilitating through different channels like Bahamas dollar. But looking at where we are in the UK, these are open questions which we need to look at. Now, one of the things is privacy. The privacy, for example, if we are talking about a scenario where we have retail CBDC in play, so we do different payments. We do push payment, we do in-person payment, point of sale, a micro payment. So the profiling is a big area. So if we do push payment, where the payment is initiated, so the profiling can come into play on all these three levels, because retail CBDC ultimately will facilitate the retail transactions, and those transactions can be push payments at point of sale. There can be micro payments. So the profiling is one of the main area in GDPR, that you cannot profile a consumer until and unless they allow you to do so. So the profiling in an automated environment where we transact programmable money come into play and the transaction is done, then all that data, all that profile, where the transaction was done, who did it, how much, all these transaction data can be monetized by third parties. Now the third parties can be the retail banks, the third parties. It can also involve a picture and profiling which can link back to the central bank. So one of the key area is privacy, a challenge for a retail CBDC. Now, if we look at both retail CBDC and stablecoin, we can categorize it into 4 different areas and domains where the challenges will come into play. Stablecoin is more about the governance. When we talk about governance, issuers, service provider, issuance, distribution, and settlement. And then we also talk about inter and intra-organizational level governance. So how internally it will be governed, who issue the stablecoin, and how between the organization, when the transaction will occur business to business, what will happen? The AML and the deposit side, the insurances and anti-money laundering come into play as well. So the governance is one of the critical issues for current stablecoin market. Then we talk about the transactional level governance. Then that where both of them will face regulatory challenges in terms of security, data privacy, and metadata when they share metadata. And then it's come to complete life cycle of the transaction, where the transaction starts and where the transaction ends. And then permissionless DLT. If CBDC transactions occur on a permissionless DLT, what will be the scenarios, how they will protect consumer on the transaction, because on permissionless model, the data is publicly available. Then if we look at monetary and financial stability, stablecoins are challenging. So they are also falling under the policy level, and how this is where the retail CBDC come into play, that they are here to balance this. Then one of the challenge which is retail CBDC will face is the banking disintermediation. That where that if the central bank issue the CBDC, retail CBDC, and what if the commercial banks, and there is an angle of disintermediation in there as well. Now, when we talk about the fourth domain is stablecoin, when we talk about different consumer level protection, then is privacy and funds and redemption and anonymity. So all these questions can be divided into 3 levels: a policy level, regulatory level, and operational level. If we are talking about a policy level, what policies will be in place to protect consumer and transactional side? Then we are talking about regulatory level, how and where the regulation will come into play to protect the consumers and the users who transact. and operational resilience. So we are talking about operational level, a transactional level governance, where the transactional process, who is doing what, who is processing my data. If I'm transacting in a stable currency, USDT, where my data is going, how that exchange share data with who, what the wallet provider is doing. So if we are looking at these challenges, then we can categorize into policy level challenge, then regulatory level challenge, and then we are talking about operational level challenge as well. What we are doing at the moment is that with University of London here in the UK, we have set up a CBDC working group where we are looking at different models and research. We have also set up an APPG CBDC in the Parliament. It's called All Party Parliamentary Group on Central Bank and Digital Currency. And we are also currently in collaboration with the University of London researching an interoperable model where the digital currency and CBDC can work, and they can work and function for the domestic payments, not the global payment, for the domestic payments. They can facilitate SMEs, they can facilitate freelancers, a programmable money model where we will have a kind of a pilot, and we will look into that. Thank you very much.
Thank you. Thank you very much, Mohammed. Well, we've heard of the challenges, and there are many by the sounds of it. Now, the Q&A has been busy, but some of the questions have already been answered. So, but what I would like to do is see if I can share some of the answers. Keith, I know that you have been busy typing away. I know there was a question on India, insights on the CBDC in India. I wonder if you can just share a bit of that for the rest of the group here.
Yeah, I'm afraid I don't know the latest status in terms of the central bank in India. Maybe somebody else on the call does, but I am aware that because of the investment that India has made in terms of national schemes for digital identity and payments, there's a significant advantage I think that India has in terms of deployment, because digital identity is one of those topics which has a relevance obviously to retail CBDC implementation when you're trying to work out how to implement privacy and KYC, etc. So having a national identity scheme in place can be an advantage in that regard. But how far the central bank has progressed with its thinking, I think they've made public statements on progressing with CBDC. I'm not sure how far they've got yet, unless anybody else on the call has a view on that.
Mohammed, do you want to add anything to that before we move on to the next one?
No, I mean, as Keith said, there are different views on this, so I completely agree with you.
Okay. Some of the open questions that we have here. How can CBDC boost cross-border transactions? Now, we did hear a little bit on trade finance, for example. So open that up back to you, Keith, for now.
Sure. So there's a project that's been facilitated by the Bank of International Settlements, MCBDC, which has been looking at the different models that exist for being able to align and integrate various CBDC implementations. And the MCBDC project has been between I believe the central banks in the United Emirates, Bank of Thailand, the Hong Kong Monetary Authority, and the People's Bank of China, I think, are the banks that are concerned. Those central banks have come together, and there's reports that they've published and also videos from conferences that give an illustration of the design and development work that's already gone on. And essentially, I think the BIS have identified there are three kind of basic models in terms of how CBDC implementations might happen, and it obviously internationally, and it all depends on the extent of cooperation that exists between central banks. Do central banks wish to implement this in isolation because they believe they have, unique requirements in terms of how they want to design a CBDC, and we end up with, a large number of domestic CBDC implementations which don't facilitate international payments? Or do we look for at least some level of standardization to allow interoperability, international payments? Or do we see a greater level of integration in terms of the design, having common components, etc., in order to facilitate much more cost-effective and faster international payments as well? So it depends in some respects on how CBDC policy decisions are made, prioritization decisions are made across individual central banks. But the BIS, I think, is doing a fantastic job in facilitating these discussions and facilitating some of the decision processes, which I think will come out as CBDC implementations progress. And certainly from the Bank of England's point of view, I think this is one of the topics. You may have seen that the Bank of England is cooperating with the MIT, the Digital Currency Initiative, and also the Bank of Canada. So we're seeing many of these multiple central bank collaborations, which I think in large part will be looking at this question of international payments.
Thank you. Mohammed, on that score, you identified the impact on data storage as a big area, and we're talking about standardization, we're talking about operational resilience and the very different approaches taken by different regulators, and there's a lot going on at the moment on standardization, on even operational resilience. So do you feel that we are going down an integrated path, or are you concerned that we're going to be a bit disparate in our development?
Well, thinking on what Keith said, I can see there are three areas. So the challenges which exist in the with the CBDC cross-border is we are looking at a legal interoperability, because every jurisdiction has their own legal laws and how they at the policy level they have their own policies and a monetary set of policies which they follow. Then we are talking about when you talk about standards, we are talking about a technical level interoperability, operational level of interoperability. If the transaction is being done from here to India, how the transaction will be managed and then transacted. So it's not a one level of looking at one level interoperability. We need to look at a different level. The first is the legal interoperability challenge. How and what different jurisdiction will allow to process the transaction across border. Then the second one is the technical. And then the third one, which is coming to play, is more like if you're talking about the data protection laws in the UK and the Europe is completely different. But if we talk about that in different economies in the world, they're different. So, I mean, it depends how all this will come into play. But I mean, what I look at is if you look at one of the model that one of the report published by House of Lords, that the current SMEs charges, which are being paid 2 to 3%, that can be brought down. I mean, it can come down to even 1% or 0.5% through this. So domestically, yes, but looking at cross-border, I would say that I have no idea, but it's looked very difficult in terms of processing transactions because we are talking about 3 layers. Yeah.
Mm-hmm. I'm going to change tack because there's a question that hasn't been answered here by, I won't pronounce the name because I won't get it right, but it's to do with farmlands, equipment, machinery, infrastructure value addition, road construction, amenities, renewable energy generation supply, farm inputs. It's more of I'm sensing that this is more, how does this help with developments in all that, in all those areas? Over to you, Mohammed.
Sure. So with the farming and the land, so I will give you an example. We did a research project where the farmer in China, they were really struggling for the finances, and they had these pigs in their farms. So what we did was through an infrastructure and a regulatory environment. So the data, so we enable those banks to have access to the data of the farms. So in real time, we enable a supply chain finance model. So what was happening really is that the bank was able to fund those farmers, looking at their transactional data and how they are performing. So all their data, once their data is available to the banks, then yes, through this, it can help the farmer, as Keith highlighted one of the projects going in Shenzhen. So we did it 2 years ago. So basically looking at this, yes, it will help farmers and all these financing routes as well. This is what I think, CBDC in domestic market. Yeah.
That's incredible, really. So we're looking at technology empowering areas that really are not normally thought of as being driven by technology advances in financial services sector, which is really amazing in terms of the future. I have a specific question that Keith, you have already answered, but just to
Sorry about that.
That's okay. Is stable coins are pegged to, just to share your answer and your thinking behind it, if stable coins are pegged to at $1, how come Luna has priced above $100 all at once at one point?
Yeah, so I touched on Terra, which was the stablecoin part, and it basically has a twin digital currency, which is Luna. And there's an algorithm which basically creates arbitrage opportunities so that in order to maintain Terra at the peg. So yes, Luna will go up or go down, and it goes up or down based on buying and selling in order to keep Terra at a constant peg. So yes, Luna will be $100 or be $1. It's really associated with keeping a peg on its parallel twin, which is Terra, the stablecoin. But unfortunately, there were half a dozen, I think, major sellers who managed to break the peg, essentially. So both Luna and Terra collapsed. And in particular, I think Terra was down to cents fairly quickly after that collapse. And obviously that has put a lot of regulatory focus, I think, on algorithmic stablecoins, which is what that was an example of, and the difficulties they have when there isn't any backing for that stablecoin. It's all really down to an algorithm, which essentially is great as long as it works. And when it doesn't work, that's when you have a problem, of course.
Sure. And sorry, I'm just trying to read as we go on here. Are there any interoperability standards being worked out in between different countries? I think we heard a little bit of that. Can you elaborate on that, please, Mohammed? I know that there's a link from Keith there.
Yes.
Well, in the Q&A.
So if you're talking about interoperability, are we talking about CBDC, retail CBDC, or we're talking about, because looking at the cross-border transactions, there's a system in place which currently works, but looking at the retail CBDC, as Keith mentioned, there is some efforts going on, but again, the question is that who would like to transact who? So we are talking about a technical standard level. But it depends if the CBDC, for example, if Bank of England decided to issue retail CBDC, then what will be the model and then how it will function? So this is the first question. And then after that, then we talk about, okay, how about the cross-border payments and how it will work there. So at this stage, I have no knowledge, as Keith explained, the efforts are going on, but there are many challenges around it.
We have a question on, do we foresee central banks opening up the infrastructure of CBDCs for private players to build solutions upon? Keith, I think. Yeah,
that's a good, very good question. And again, talking about what we're looking at from the Bank of England's Technology Forum on this question. And it is very much seen, I think, as a platform for innovation, being able to facilitate the growth and development of the digital economy. Therefore, absolutely, things like programmability, for instance, there are a lot of potential new interesting use cases that private enterprises can facilitate using a programmable CBDC. Having said that, obviously, there are regulations that need to be in place for the entities that have access to CBDC in that respect. So it's not necessarily just bank-based entities, but they obviously have to go through approval and regulatory approval in that kind of context as well.
One thing that, we hear about is the metaverse and Web3. Tell us a bit about how you see CBDC and retail CBDC developing in that scenario.
Who are you asking?
Keith, sorry.
Okay. That's.
And I'll ask Mohammed as well on that one.
I'm sure Mohammed's got a view. Yeah, that's an interesting question. I was actually speaking at an event on money in the metaverse, which is one of the interesting topics, I think. So it's a super interesting question, I think. We can subset that question, I think, is to what extent CBDCs may play in the world of DeFi, for instance. Will we see a digital pound and a digital euro, etc., be able to be used within the DeFi environment in the same way as stablecoins are today? And that's a question I've certainly raised in both the Boston Fed and to the Bank of England. And in fact, most of the central banks I've talked to on that question recognize it's a valid question. Obviously, no decision's been made in most cases as to whether that would be the case, but it is a very valid question to ask. And if you consider, DeFi has obviously gone backwards a little bit over recent months, but if you consider DeFi is here to stay, and it's a subset of what we may see within the Web3 environment, then if you're going to design a central bank digital currency to work within and facilitate and develop digital economies, then the world of DeFi and Web3 is something you would want to design for. Therefore, you would want it to be accessible within those kinds of environments. Now, obviously, there are challenges in that. Mohammed already mentioned that DeFi, etc., stablecoins today reside on permissionless blockchains. Most of the expectation, I think, for CBDC is that will be within permissioned blockchains in order to be able to provide identification, authentication, etc., privacy. So, you know, it's not without its challenges, but I think it's going to be a super interesting policy question as to whether retail CBDCs will be made available into these new kind of financial paradigms, including DeFi, including Web3, including the metaverse, or will it remain under the auspices of stablecoins, which obviously will be there at the moment, game-based tokens and other kinds of payment mechanisms, crypto, that might exist. So it's a question of whether CBDC will take its place along those alternatives, and if so, how. But I think it's a super interesting question that is, you know, still unclear, but it will be one of the ones I think that will need to get answered as part of CBDC policy decisions.
Mohammed, do you have anything to add to that?
Yeah, I mean, it's the programmability of the CBDC which come into play with the solution providers and the people who will build on the top of it as a value-added layer, if you like. So then that's where it's, again, accessibility and usability. So how much is accessible and how the player in the market are using it. So yes, the one thing which is very important is the smart contract, which we were talking about.
Yeah, interesting. Yeah,
they will execute anonymously, and then programmability come into play, where we are talking about a whole set of things in terms of invoice tokenization, in terms of supply and finance, DeFi. So yeah, so all this, it's in my opinion, it's more like if it's available and how it will be available to the player in the market. So programmability is one of the main domain where it should be programmable and it should execute the transaction autonomously. But there is a challenge there, smart contract, and where those smart contracts will be executed. If you're talking about a permissionless DLT environment, or you're talking about a banking environment, or you're talking about a private bank environment, and how much energy it will consume, and who will pay for those smart contracts to trigger. So, I mean, there's a lot of questions around it, but yes, it will with the metaverse and yeah, Web 3.0.
Very interesting area to watch. Another question just come in. Could CBDCs be interoperable with cryptocurrencies, or will the agenda behind CBDCs for governments be to shut down the cryptocurrencies? I mean, there's a balance between disintermediation and it's competition almost between central banks and cryptocurrencies. What do you think, Mohammed, on that?
So I think they are not shutting it down. And in reality, cryptocurrency is what? It is a token. It does not exist without a debit card. So it's just fulfill a use case. So basically, the MICA in EU, market in crypto assets, and the FCA regulations, what they are giving them a level playing field to be regulated, and under certain domain and under certain area, they can deliver their services and they can launch their tokens. So now, when we talk about interoperability from cryptocurrency into retail CBDC, yes, this will be one of the main interesting area where the regulated stable currency, virtual currency, which are regulated, and retail CBDC, they will be interoperable. That's how it will add value to the decentralized digital economy. And this is what we are looking at as well, how these three can be interoperable with each other. So yes, but they are not shutting them down. In 6 months' time, we'll see more regulation, but the regulation are here to protect consumers and transaction processing service providers. So yes, but answer to the question is that yes, to interoperability and no to the shutting down of the currencies.
Sure, thank you. Just to expand on the fact that it's a matter of when, Keith, when do you see in the UK a retail CBDC?
Well, as I mentioned, the formal Bank of England view is the second half of the decade, subject to decisions being made to be implemented. And I have no reason to question that. I still think there are significant policy decisions that need to be made on things like privacy, offline payments, programmability, and that sort of thing. And the bank is coming out, I believe, with a consultation paper later this year. And I think in part, the responses to that consultation paper will be have a significant impact in terms of both the general perception of CBDC and the prioritization it may have in terms of timescale for implementation. ECB went through a similar exercise in terms of consultation, as you may be aware, and privacy was an overriding consideration that came out of that. So it'll be interesting to see, I think, what kind of feedback the bank get in the UK. Yeah,
absolutely. We have a comment here from Saul Grant, who says, I can't see benefits of CBDC to anyone who supports principles of DeFi. Surely CBDCs are a panic response. I need to digest this one before I can ask it. So I'm going to go on to another one. I'm trying to make sure that we cover as many of our audience questions as possible. We have another one here from Romit Kopla, who says, right now, a lot of cryptocurrency is used primarily for speculation. Do you foresee stablecoins becoming mainstream as a mode of payment for purchase of goods and services, which is really my question. I know you said towards the, later in the decade for the UK, because acceptability of stablecoins may lead to currency risks for some countries. Keith, do you want to take that one as you were answering?
Sure. I mean, I think it's an open question at the moment. I mean, I think the BIS has made comments along the lines in the most recent report that stablecoins aren't a tremendously great means of making payments. And obviously in multiple countries, we have faster payments implementations that are obviously fast and relatively low cost, etc. So to what extent we'll see payments being made increasingly by stablecoins, I think it depends. I think the jury's out on that one. And if that's happening, to what extent CBDCs will have a role to play alongside that stablecoin perspective. The other key factor, of course, as Mohammed talked about, is that stablecoins are probably the biggest focus for regulatory attention at the moment. He mentioned MiCA in Europe, and obviously in the UK, the Bank of England has made comments about stablecoin regulation, FSB, the Financial Stability Board, likewise. So inevitably, I think we'll see stronger regulation, specific regulation as far as stablecoins are concerned, using this mantra we hear multiple times of same activity, same process, same risk sort of thing, same regulation. And therefore, that may well have an impact in terms of the services that stablecoin issuers are able to provide and how that will figure in terms of their use for payments as well.
Right. Mohammed, the challenge that I'm seeing on this question that I tried to read out before is that is it a case that governments are very interested in CBDCs as a way to control the financial system and the population? And then do you feel that sensible regulation and mainstream adoption of crypto will entirely remove the need for CBDC implementation for the end user? So to speak, that's the question. I think it's a challenge to say, do you think the population will take this up, given the almost big brother view of having our data available to central regulators?
So, I mean, to answer this question, first of all, we need to look at the current, for example, there are many, if you look at USDT Tether, now they say, okay, we are backed by pound and we are backed by dollar and blah, blah, blah. So this is one of the area where the regulator will come into play. Okay, if you are facilitating transaction in the UK, you will be only backed by pound. So you cannot go and do, okay, say a basket of currencies. So that where the central bank come into play to protect the monetary values of the country and financial stability. Now, this is the first bit. So how it will, and yes, the adoption will be based on whether if the consumer transact in a stable coin, whether he pay for conversion, what are the production around the data? If he is transacting a cryptocurrency for buying household, I mean, the goods and services. So how much conversion he has to pay? What are the procedure? How much fee you going to add on the top of 2 and 3% which you are paying now? So all these questions around this. So, I mean, it is not that cryptocurrencies, CBDC will replace cryptocurrencies, but they will coexist under the regulation, and they will facilitate the purpose what they are designed for. For example, Bitcoin is fulfilling a purpose. Ethereum is solving a problem. So if the one which are not problem solving, they will go out of the market, because looking at what they are doing is a speculation and how they're working and functioning. So again, I would say that it's not retail CBDC is an opportunity for us as a citizen, as a consumer, to have low fee payments, and for small retailers as well. And in terms of the privacy and data, it again depends how it will be designed. Yes. And you take the ownership. Yeah.
Fascinating. There's a question here about, will the first widely used G20 block CBDC not kill every stable coin? What do you think, Keith? Is that a challenge that?
I'm not quite sure if the question means the G20 issues its own CBDC, which sounds like a Mark Carney idea. Or we're talking about a G20 country issuing.
I think a G20 country. I think, yes.
No, I don't think it'll kill every stablecoin. And as I said before, I think it depends exactly in terms of how a CBDC is designed and developed. So, for example, if it doesn't play within a DeFi environment, then stablecoins are still going to be an integral part of the DeFi world. And even if it did support a DeFi kind of world, then stablecoins will still have their place. So I think it shifts the balance very much. But all these things I think are going to continue. It's just that the balance will shift, and it depends very much on the design decisions that are made, policy decisions that are made, exactly where that balance ends up.
Sure. And there is a related question, I think, here, which is, do you have an idea of which countries will readily accept stablecoins as a means of exchange? And is there any worry of devaluation of a stablecoin given the rate of inflation globally? So we're bringing it straight into today now, and one of the key concerns globally.
Yeah, I'm not sure if when we say countries readily accept, I mean, obviously stablecoins aren't necessarily regulated consistently everywhere at the moment. Therefore, anyone in any country can use stablecoins in that respect. So whether we mean acceptance in terms of payments by merchants, for instance, I think that's a different type of question. I mean, it's certainly true that MasterCard, Visa, etc., are very active in terms of understanding how digital money, be it CBDC and also crypto, can what their role will be in as and when these digital forms of money play a much bigger role as far as payments are concerned, and what that means for the franchises that, for example, MasterCard and Visa have in that respect. And obviously regulation is the other key question, as we touched on, which will have certainly have an impact in terms of the development of stablecoins themselves. And in terms of, I'm not sure about I mean, obviously inflation is going up at the moment. And devaluation depends very much on the fiat associated with the stablecoin, assuming that we're talking about a fiat-backed stablecoin. The whole point is it's going to be pegged to a fiat representation. So exactly, it's going to follow the same as the fiat as far as devaluation concerns are concerned, I think.
Yeah, so we'll take the next question on tokenomics of CBDCs be different from fiat currency. If yes, then why should they both have different economics of supply? Or will they be parallel? I think that's what you've just been talking about there. There's a question which is to do with the structure of banking globally. Will there be significantly fewer banks globally after CBDC is widely in place? And how can we have faith in the mining of cryptocurrency made possible in phones using Stellar consensus protocol as algorithm, like the PI network, Bitcoin, for more than 35 million users? Can I field that to you, please, Mohammed?
Well, the protocol you mentioned, they are currently Stellar and the Pi, and the third one, I don't know which one is it.
Bitcoin, Satoshi, BTCs, yeah.
So they have their own, I mean, currently they are solving a problem, they have their own use cases. So what Stellar does is Stellar provide you a protocol, you can pick it up, and then whether you can transfer tokens to Stellar or you build on the top of Stellar. So it depends. So they have two different versions, but bringing them into a more like environment where we're talking about retail CBDC, a regulated environment. So there are a lot of questions which needs to be answered first. Like, as I said, on the regulatory level, which we are talking about, but these two, they are not stablecoin, but they are an infrastructure layer, if you like. They are the blockchain layer. So now on this blockchain layer, if they are processing transactions, and then again, jurisdiction, where they're processing, what data is processing, and how and what is done around that. So when, say, for example, if Bank of England decide, okay, they will not, but for example, if they decide, okay, we want to adopt or use a distributed ledger technology, then they will look at the technology which are, and yes, one of them, looking at the technology and the strength of the technology, what they are offering in terms of anonymity, so they can pick up these protocols, and their protocols can be used for pilot. They are being already referred in different papers. But looking at adoptions and how they will bring in, I mean, how they will come into play in the regulated environment, I can't see anything there.
Okay, thank you. Thank you. There is what, according to you, is the fundamental difference between a country's CBDC and their existing digital currencies? What difference would there be from a payer's point of view, Keith?
Yeah, well, first off, the fundamental difference, I'm assuming, is the difference between central bank money and commercial bank money. So a CBDC, as I've mentioned, is central bank money. It's a liability in the central bank, and it's a new form of liability in the central bank, the others being physical cash and, as I said, deposits at the central bank itself by commercial banks. Whereas existing digital currencies are essentially commercial bank money, non-central bank, and therefore they're a liability of the commercial bank or whoever the provider is in that sense. Key question is, does that make a difference from a payer or a payee's perspective? I mean, that depends. Obviously, there is a risk difference between central bank money and a liability on a commercial institution. Does that make a difference at the end of the day? I think that's a key question, because that, as I touched on in my presentation, is a big question for adoption. If it doesn't make a difference, then CBDCs may not be successful and existing payment mechanisms will continue as is. Whereas if it does make a difference, and you'll see in the Chinese example, I don't know if you saw it, but there was a survey there which talked about some of the advantages that the survey population in China had for CBDCs versus other models. And if that does make a difference, then obviously it does have an impact in adoption in the other direction.
There's a question about whether stablecoins are used as safe havens or escape routes for cryptos. Why would any central bank issue extra amounts of CBDCs when demand jumps as a result of a crash on the crypto market? Mohammed, do you want to take this one?
So yeah, I mean, okay. We are talking about two environments here again. One is what's happening currently in the exchanges and how this is being used in the crypto world and for what purposes. And secondly, we're talking about a more domestic environment. So if the stablecoin issuer is regulated and exists in a territory jurisdiction, so he must have all these procedures of AML and KYC. So looking at that, and identity is one of the main player here. So looking at that, if they are transacting from CBDC, because what Keith just mentioned, there is looking at what's happening in China, there is a cap on how much you can do and how much you can have. So based on that, if it depends on the model. For example, Bank of England decide a model will come into play, they will look all of these aspects around. But looking into the domestic level, no. But exchanges is already happening. So
sure, of course. How will CBDCs protect users from hyperinflation disasters, such as happened in Venezuela? Any centrally controlled currencies at risk of this, surely, digital or not? Keith, I'm ping-ponging between you at the moment. Questions are coming one at a time, so it's a bit difficult to...
No problem.
Yeah.
So, yeah, I mean, yes, essentially, I think, those kinds of risks exist, and whether it's a digital form or not may not make a huge difference. The only point I'd make is that when you have a CBDC, things like programmability, interest rate changes you might have in the CBDC, the central bank has additional levers it can use in a way which they don't necessarily have in physical cash, for instance, in terms of issuance, etc. So in some respects, the CBDC gives more ability to the central bank based in terms of how it, from a policy point of view, it allows it to be used, caps and so on. So, you know, we may have some benefits in that respect, but at the end of the day, if there is going to be a hyperinflation risk, then it's unlikely to stop that happening, because obviously that has much bigger economic implications and causes than whether there's a CBDC in circulation or not.
We've sort of got to the end of the questions from the audience so far. I have a general question from me, which I'd just like to ask. What do you foresee as the structural changes to the financial services sector as CBDC unfolds? You know, we've had a question about, will there be fewer banks? Are there any structural changes to the sector that you foresee as this unrolls? Mohammed?
Well, structural changes as technology level, I don't see any, because there is a system exists and works. So
okay, that's encouraging.
Yeah, so that is part of the offering. That will be part of the offering, that how it will function with the current system, which is already functional, tested, secure. But with if we talk about the competition level, yes, it will enhance the competition. There will be more kind of programmable transactions, more kind of a DeFi models which come into play based on the retail CBDC, but more in the regulated environment. We cannot relate this with what's happening in the crypto world, but more in a kind of environment where the payments current, and it will enhance the current inclusion of whatever is happening in the market now. It will take it one step upwards. So to me, no technological structure changes, but it will enhance the competition in the market.
Okay.
And as long as it's been available to the user and accessible by the user.
I mean, the only thing I would add to that is that, you know, for many jurisdictions, the point of the CBDC is to facilitate innovation, to bring private companies on a regulated basis coming in to deliver that innovation based on what a CBDC could do. So that might bring positive structural improvements, not commercial banks going out of business or anything, but enabling, as Mohammed said, more competition, more innovation, more facilities in line with what we might hope for in terms of what a digital economy actually means, to be able to facilitate different types of transactions in advance using the true potential of programmability, for instance. You know, things like having cars making payments on your behalf, for instance, around tolls and petrol and the rest of it. So there's a whole load of potential value there, which I think is more innovation than it is about any negative aspects around structural change.
Excellent, very, very positive outlook. And what about the current focus on operational resilience regulation coming through? I mean, trying, you know, with so much out on the cloud, with these decentralized platforms, the challenges of operational resilience and complying with standards, with emerging standards there, are they increased at all, Mohammed?
Well, when you talk about the operational resilience, we should really look into two. We talk about technology side. So looking at the decentralized model and distributed ledger technology, or we're talking about a centralized model, is already tested and working. So when we say, okay, distributed ledger technology, blockchain come into play for the operational resilience, but the question is that whether it will be publicly available. Yes, the technology can be in a closed loop, and how it will be merged with the centralized model. It will be kind of a hybrid model. So whether we can go to the tokenization. So there are two models in cryptocurrency: tokenized token and account-based model. So if we can combine these two, and ultimately these two will be combined in a CBDC environment, because as a consumer, I could hold the CBDC in an offline environment. So that's a token. It gives the authenticity of the token. It's not me as a token, where the value come from. And then again, the account is another thing. So resilience is the technology infrastructure, which can be combined in both level, and consumer level, and more on the commercial and central bank to the commercial bank. So again, it's dependent on the architecture, what kind of architecture being looked by the bank, which can be interoperable again. with different services. So.
Thank you. Yeah, I just wondered because we're running quite a lot of workshops on operational resilience at the moment. So that was the question that occurred. One final question from the audience. What are your views on making people aware of digital currency and what it means for the retail customers? Keith?
Yeah, that's a super important question, I think, in particular for adoption. So as I mentioned, the Bank of England's planning a consultation exercise. The ECB has already done consultation exercise. The Fed in the US flashed up very briefly the picture from the effort to get feedback that the US Fed went through as well. So I think that's a vital part of that to understand what the general population and businesses view is of a CBDC. Is it needed or is it a solution looking for a problem? What they consider the most important characteristics of a CBDC, questions on policy and privacy, etc. So yes, super important. And there's obviously a certain amount of education and awareness that needs to be built to inform people so that the responses and the views that they form are based on, having been informed rather than speculation and misunderstanding of what the object of a CBDC actually is.
Oh, questions are dribbling in. Can CBDC phase out fiat currency? And if yes, what alternative measures should be taken to back global financial transactions?
I mean, just to jump in there, CBDC is fiat currency, so it's just fiat currency in a different form.
Yeah,
so.
thank you. Yeah, I thought that you might answer that.
Sorry, just jump in.
That's good. That's good. Good. I think we've come to the end of the current. I think I'm very aware that, if we were to repeat this in a year's time, we would have conversations really developing. At the moment, I think there's we've got a lot of learning to do. So thank you for beginning to put that learning into a kind of roadmap for us so that we can start to understand it and develop our own views of it. So very, very big thank you to you, Keith, and to you, Mohammed, to Valentinos, who's organized all this, Sulla, the two Professor Rajes. And I'm going to hand back to Sulla now to close the session, I think.
Well, on behalf of everybody, I would like to thank all our speakers, as well as our audience coming from all over the world. So thank you again, and have a great summer, everybody. And tune in for the fall for new exciting series like this one that we just finished today. So thank you all. Have a great summer.
Thank you.
Thank you.
Thank you, everyone. Sulla, you remaining on for a second?